Hey guys, welcome to the Web Planning channel, and today we're going to be talking about travel allowances. With the recent fuel hike and constant rising of cost of living, I felt that it is imperative for me to compile this video in order to help you guys to get some extra savings into your pocket. I hope this helps. Let's get into it. In this video, we're going to learn the following. What is a travel allowance? Who is it for? The benefits and the pains, and the process of how to claim. So remember guys, as you're watching and progressing along this video, remember I am a registered tax practitioner with the South African Revenue Service. However, this video is not full advice, it is mere guidance. Should you require any further guidance and something that is relevant to your situation, please contact us. Details are down below. So according to SARS, a travel allowance is any allowance paid or advance given to an employee in respect of traveling expenses for business purposes. Any allowance or advance in respect of traveling expenses not to have been expended on business traveling to the extent that it has been spent on private traveling. This includes traveling between the employee's place of residence and his or her place of employment, or any other traveling done for his or her private or domestic purposes. Now, in the definition from SAL's website that we have there, it refers to an employee. In a traditional and a typical sense, an employer and an employee relationship needs to exist, whereby the employer gives the employee some sort of allowance, so an additional income that is purposely for the reasons of the employee to do business related work that relates to their employment, and therefore this business related work will be reimbursed in order for the employee to pay a lesser tax. But for the purposes of this video, my main focus is not necessarily on the employee, but rather the independent contractor, which is a person that could be regarded as an employer and an employee. An employer because they own the business and they do the business within, or they do the work within the business. Therefore, they also act as an employee, because in any sense, if you own a business, you are your first employee, or in other words, you are employee number one. So there are travels that you do on behalf of the business that which you can get a tax benefit of. The main benefit here is you get to pay significantly lower taxes. Now, what are we looking for here? Usually, based on what we have discussed so far, we're looking to get an deduction based on the travel expenses. Now, that is one part whereby you pay 100 Rand for fuel, you can deduct almost about 100 Rand back in terms of fuel. Obviously, I'm simplifying this, but I want to show you guys that there's an added advantage that can give you even more money back into your pocket. I'm talking about capital allowances, where you are able to deduct what we call wear and tear. So wear and tear is effectively the tax version of depreciation. Most people say when you buy a vehicle, that vehicle starts depreciating the minute you drive it out of the showroom, which is true. But now most people, what they don't realize, that depreciation, which is a non-expense, that is actually a cash flow out of you, but it's an expense based on usage and wearing and tearing of any asset or a vehicle in this example. Now, this non-cash expense can actually be deducted against your tax liability, therefore giving you actual cash in your pocket. And this is what makes this whole travel allowance video such a powerful thing for you to understand. Mr. X owns a vehicle valued at 280,000 that he bought on 1st March 2021. He incurred the following expenses: fuel cost at 18,000, maintenance cost or service cost at 8,000, insurance costs at 2,400, finance charges or interest expense at 17,500, licensing costs at 650. All of these total to 46,550. At this point, guys, it's important to realize that all the items that have been put down as expenses here are the type of expenses that you guys need to document and look out for. Keep receipts as well in order to justify the expenses that relate to the vehicle that you're using. Mr. X would be able to claim as follows: 8,000 divided by 32,000 kilometers multiplied by 46,550. This equals 11,637.50 cents as a business travel expense against his gross income. So effectively, you can get 11,637.50 cents back in your pocket by simply paying lesser tax than you need to. But there's more. In addition, Mr. X will be able to claim a 14,000 wear and tear capital allowance according to section 11E. Now, wear and tear is a non-cash expense. Usually in accounting terms, we refer to it as depreciation, as in most cases when people buy vehicles, as it said, when you buy the vehicle and it leaves the showroom, it starts to depreciate. And people generally look at this as a bad thing, which potentially it is, because it is decreasing the value of what you bought. But most people forget that they can actually get a cash benefit from this supposed depreciation. Now, once again, this is an additional feature of which, if you are an employee, you are unable to claim this. This you can only claim if you are an independent contractor, entrepreneur, there's somebody that is self-employed, or somebody that does, you do not necessarily earn a salary, but you earn income and you're charged against your gross income. Now, what this does is it gives an added cash benefit from the sales income that you have to pay less of due to the depreciation or the wear and tear that you're claiming. Now, how do you calculate this wear and tear? The wear and tear capital allowance is calculated as follows: 280,000, which is the value of the vehicle, divided by 5. Now, this 5 is the depreciation rate or the wear and tear rate, of which SARS gives you a guidance on how much per asset or on the type of asset that you're allowed to deduct from. So this is not a random number, but it's a number that SARS gives the guide of as to, depending on the asset that is allowed for it to be applied in terms of wear and tear, they give you the year. So you use that, and basically if it's 5, it means that over 5 years, so you can get this benefit, this wear and tear allowance for the next 5 years or within 5 years. And that's how that 5 is determined. Now it's 280,000 divided by 5, and then we have what we call an apportionment, which is 12 months divided by 12 months. What that is doing is that based on when you actually buy the asset. So in other words, here we bought it in March, and from March to February, that's a full 12 months. So over the 12 months, it equates to 1 year, because at the end, if you're dividing by 5, it's dividing the 280 over a year, and then you apportion it to the year. So in other words, if this asset was bought halfway through the year, it would be 6 divided by 12. Then you are doing an apportionment of the allowance to equate it to 6 months within a given year. So in this regard, we got it for full 12 months, so therefore we're getting the full 12 months. And then you're gonna multiply with your apportionment, which is 8,000 kilometers, the business travels, divided by 32,000, which is the total travels. All of this equals to 14,000. So in total, we're looking at 14,000 plus 11,637.50 cents. That will amount to the tax liability decreasing by that amount. That's almost 25,700 worth of money back into your pocket. So to summarize, guys, what is the actual process in a very simplified manner? At the end of the day, you have travel expenses, as one is attributed to, can be fuel, can be finance charges, could be service, maintenance, all the like. So all these expenses, you would sit down at the year end, take them together, put them, and then able to get your final amount, take your logbook. So this is where a tax practitioner will usually help. So at the end of the day, that's where everything that you should have done by this point, it's how it's going to play for you, and you're gonna get that beautiful tax refund at the end of the day if you play your cards right. So I truly hope that's a situation for you. I made this video to help you guys. Yes, that fuel hike has really been just horrible, and guys, stay safe there, use money wisely. At the end of the day, thank you for watching. I really appreciate that you guys are watching this video, supporting and subscribing. And once again, hope you learned something. See you in the next one.